The business is in the business of making a profit. Can happy employees make a better profit? 100%. A business should want to have happy employees. I don't understand why businesses wouldn't want to do that. But what you have to understand is that a business's number one goal is to maximize their shareholder value. It is to maximize their profit. And if you want to get the most value for yourself, for your life out of the business, you have to understand the name of the game for the business, because the business wants this. And this brings me to the third point that you have to understand now is how do you get your piece of the pie? When most people talk about maximizing their income, what they're thinking about doing is doing this, climbing up the corporate ladder in this way, where now you're working harder, that way you can keep getting your promotions, keep getting more income. Now, this is a start, right? If you are climbing your way up this ladder, you are keeping yourself as an irreplaceable employee, because once you go higher, you become more and more valuable in the company, which means you're also making more money. But every single person in here, even the CEO of a company, is working for somebody else. Because yes, the CEO does have a boss. These people are working for the shareholders, the owners of the company. And so now, if you really want to maximize your income, what you need to do is figure out how can you not just climb the corporate ladder, but own a piece of the corporate ladder. Now, of course, as you work to climb the corporate ladder, as you work to earn more money, as you work to make the company more money, you will make a bigger income. If you don't, there's something wrong with your company. However, if you really want to maximize the money that you get, you have to figure out how to own a piece of the company. Because like I said just a minute ago, if you're making $50,000 a year, your company is probably making $100,000 a year off of you. So now, if the company is making 50 grand and you're only making 50 grand, how do you get a piece of that $50,000? Because that's the company's income. If you want to own a piece of the company's income, you have to own a piece of the company, which means you got to become one of the shareholders. Now, either this means you go out and start a company, or you can take a piece of the money that you're making and use it to buy a piece of the company. So, if your company is publicly traded on the stock market and you like your company, you believe in the value of your company, you can take some of the money that you're making and go out and buy a piece of that. Or if your company is not traded on the stock market and your company offers you a piece of equity, well, now maybe you get the equity by working or negotiating your income with some equity or ownership in the company. Not every company is going to allow for that, but some companies will allow you to get an income based off of your equity. If you look at some of the most highest paid CEOs in the country, they're not getting paid just a flat salary. They're getting paid with equity, ownership. Because now you're not just getting paid no matter what, you're getting paid based off of the profit that you can generate here through the company. And this goes back to the question that I was talking about just a couple minutes ago, which is what is the goal of a company? The goal of the company is not to make their employees happy. The goal of the company is not to make their customers happy. The goal of the company is to make their shareholders richer. This is the fiduciary duty of a company. Their goal is to increase the shareholder value, meaning the goal of a company is to drive up the value of the company, drive up the profits to drive up the shareholder value. Now, in order to do that, a good company, a healthy company, would want to make sure they have happy customers. Because if you have happy customers, they're going to keep coming back. A good and healthy company is going to want to make sure they have happy employees. Because if you have happy employees, they're going to want to work harder. They're going to want to keep coming back. Because if an employee feels happy working at this company, they're going to want to keep driving value. Now, not every company thinks that way. Every company has their own vision of what is a happy employee or a happy customer. But at the end of the day, the profits do not go to the employees, generally. Now, in some companies, you have exceptions to this, but in general, when you're getting paid as an employee, you are getting paid a salary, which means you're getting paid to do a certain thing. And if you are replaceable to do that certain thing, you are just going to be paid whatever the market's going to be willing to pay. But if you can drive up your value and you can make yourself more irreplaceable, now you can drive up your salary. But then if you really want to maximize your income, that means you're going to have to own a piece of the profits. And a way that you get a piece of the profits is either the company pays you with equity, which is available in some instances, or you work to now take the money that you're making and use it to buy some equity. Maybe it's your own company, maybe it's somebody else's company, but you have to own some of this equity That way now you can benefit from the profits as well, because the profits go to the owners, the profits don't go to the employees. This is a basic fundamental concept of our economic system that we should have been taught in school. But if you want to get a piece of the profits, you have to be one of the owners. And the nice thing about this, because there are some nice things about this, is it has become so much more accessible than ever before for anybody to become one of the owners. Because now we have access to a bunch of tools and apps that will allow you to invest in companies on the stock market and even invest into startup companies with as little as $100. I mean, even $10 nowadays. So if you have a little bit of extra money, now you can start taking this money to start owning the company instead of just buying the Apple products, instead of just buying the Lululemon products, instead of just buying the extra guac from Chipotle. Now you can own a piece of the company. That way, as the company makes more money, as the company gets more employees, as the company makes employees work hard, you own a piece of the profits, and you get those profits without having to work in the company. So the shareholders are not the ones working in the company. The employees are the ones that are working to drive up the profits of the company. If you want to make the most money, you got to own the profits, which you get not from working in the company. You do that from buying the company while working to drive up your income by working in the company. That way you can own more equity outside of the company. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.